Welcome to the deep dive. Options trading, right? Sometimes it feels like everyone's speaking a different language.
Yeah, it can be a bit overwhelming.
Today, we're breaking down one system. It's called the profit cycle. And it's not just about like buy this, sell that. It's about managing your money like a pro.
Exactly. It's more about, even if you had the best map in the world, you wouldn't get very far without knowing how to pace yourself, right?
Right.
Conserve your energy. The profit cycle, this is something that was laid out in a blog called Optionister, and it really brings that strategic thinking to your trades.
So less about picking the perfect stock, more about having rules for the game.
Precisely. And it all starts with this idea, which I find really unique, where you divide your trading capital into two accounts.
Two accounts.
Yeah, you have a capital account and a profit account.
Okay, now you've piqued my interest.
Yeah.
So it's like, what, having separate jars, one for spending money, one for like long-term savings.
You got it. The capital account, this is where you're making your initial trades from, kind of dipping your toes in the water, so to speak.
Okay.
And Optionister, they actually recommend only using about 3-5% of your total capital for each trade that you take from this account.
So starting small, not going all in right away.
Exactly.
Okay, that makes sense. So then the profit account, that's like your reward fund.
Yeah, you could say that, but here's the catch.
Right.
You're not actually touching those profits until you hit a certain target that you decide on beforehand, like a specific dollar amount.
Oh, okay.
Or percentage gain.
So it's not just about making money. It's about like proving to yourself you can do it consistently enough to have this reserve.
Exactly, and Optionister really emphasizes this idea of focusing on just a handful of stocks at a time. They call them your focus symbols, rather than just chasing every single hot tip that comes across your newsfeed.
Okay, so no jumping into the market willy-nilly. Got it. So walk us through a trade using this system. What are the actual steps?
Sure, so they use two different types of what they call lots. A starter lot and an accumulation lot. Think of your starter lot as, kind of like your initial test,
Check.
putting your toe in the water.
Got it, got it. And then, so if that initial trade starts moving in your favor, that's when the accumulation lot comes in.
Precisely. And this is where you might make your position even larger, potentially 3 times the size of that initial starter lot.
Oh, wow.
To really capitalize on a potential trend.
So you're adding fuel to the fire if it's burning brightly. But this all hinges on making smart decisions, not just getting, like, excited because a stock is moving.
Yeah.
How does the profit cycle help with that?
Well, that's where those two accounts come back into play, right?
Right, okay.
Remember, you're only tapping into that profit account once you've hit a certain level of profit.
Okay.
And then you shift a portion of those profits. Optionister recommends 80%.
Oh, wow. Okay.
Into that profit account.
So,
and then the other 20% stays in your capital account.
okay, so it's like a reward, but I'm guessing there are rules even for the profit account. You don't just get to go wild, right?
Of course, there are rules at every stage of the game. So the blog recommends only making 2 consecutive trades from that profit account. Think of it as, you're on a winning streak. You don't want to push your luck too far.
I can see that.
Yeah.
So you're riding that momentum, but you're also knowing when to maybe pull back and reassess.
Exactly. And then after those 2 trades, win or lose, you move the balance of your profit account back into the capital account.
Okay.
And this completes a full profit cycle.
And then you rinse and repeat, hopefully, ideally, with a little bit bigger capital account than when you started.
Yeah.
I'm already seeing how this encourages like a more disciplined, strategic approach.
Exactly. You're thinking long term. You're focused on those consistent gains over time rather than always chasing these, risky home run trades that a lot of times,
Don't work out.
they result in strikeouts.
And probably a lot less nail biting along the way, too.
You would think so, yeah.
Okay, so that's kind of the bird's eye view. But I think it'd be helpful to break down some of these concepts even further, especially those trading lots. Like, what do those actually look like? What are we talking about here? All right, so we've got these starter lots and accumulation lots, but what are we actually talking about here? Like, one lot could be a tiny trade or a huge risk depending on the options.
Yeah, absolutely. I mean, there's no magic formula for position sizing. It really all depends on your own personal risk tolerance and the specific options contracts that you're looking at. Optionister is very big on stressing that each individual trader really needs to figure out what works for them and what they're comfortable with.
Okay, so it's not like they're handing you a rule book and saying trade exactly this much.
Yeah.
But I'm guessing they offer some guidance. Like, where do you even begin to figure that out?
Yeah, so they do have some guidelines, especially when it comes to those capital account trades. And you remember that 1-to-3 ratio we were talking
Right.
about?
Right. Right.
That's really key here. So for every one contract that you have in your starter lot, you could add 3 more with that accumulation lot. So let's say, for example, you're looking at, I don't know, Apple calls,
Sure.
and you're comfortable risking, we'll just say $200 on a starter lot. Using that 1-to-3 ratio, your accumulation lot could then be as much as $600.
Oh, wow. Okay, so it can get big pretty quick.
Yeah, but only if, and this is a key point, only if Apple is moving in the direction that you predicted with your initial trade.
Right. So it's not just about, throwing good money after bad. It's about, like you were saying earlier, discipline.
Precisely, yeah. You're not just chasing those emotional highs and lows. Now, the profit account lot sizing, that's a little bit different because now you're playing with, we could call it house money.
Right. So these are profits you've already made.
Exactly. So, we talked about how you're only taking 2 consecutive trades maximum before you cycle that money back to the capital account.
Right. Like a little 2-step victory lap before you get back to business.
Precisely. And Optionister suggests that you keep your position sizes relatively similar for those 2 trades, but this time they recommend a 2-to-6 ratio for your starter and accumulation lots.
Oh, interesting. Okay, so even when you're trading with profits, there's still that focus on controlled growth. You're not just like, all right, well, let's go crazy.
Yeah, absolutely. We're still aiming for consistency. Remember, after those 2 trades, we're shifting most of that right back into the capital account, right?
Right.
That 80%.
And then the 20%, it's like a bonus that stays in.
Exactly.
It's so funny. It's like, I love how this system almost like gamifies the process.
Yeah, it does.
Makes it feel a little bit less like gambling and more like a strategic game.
Yeah, it's a great way to put it. And speaking of strategy, let's talk a little bit about those focus symbols. We've been using Apple as an example this whole time, but obviously this isn't a one-size-fits-all approach. How does Optionister recommend people go about choosing their focus symbols in the first place?
So they're very big on specialization. Meaning, instead of trying to, be everything to everyone, chase every hot stock tip or sector, they recommend picking, again, a small group of stocks, those focus symbols, and really getting to know them well.
Becoming an expert on a few things rather than kind of a jack of all trades.
Precisely. It's about understanding those companies, their financials, their industry, how their options typically behave.
Yeah.
So you're not just relying on a gut feeling, you're really making a much more informed decision. That makes a ton of sense. But I am curious, do they recommend people stick with the same focus symbols for like every profit cycle? Because, markets change, things evolve. It seems like you might want some flexibility there.
You're absolutely right. And they actually do encourage adaptability. So if you're consistently finding really good opportunities using the same focus symbols, great, stick with them. But, don't be afraid to switch things up based on your own, maybe your risk appetite at the time or your market outlook.
So, if suddenly tech stocks seem way too volatile, you could say, okay, for this next profit cycle, I'm going to focus my energy on a different sector.
Exactly. You have to stay dynamic and really adapt to the market, which is always changing, as we know. However, there is a little bit of a twist when it comes to the profit account.
Ooh. A twist. Now you've got me on the edge of my seat. What's the twist?
So for those trades that you're placing from the profit account, they actually recommend using a completely different set of focus symbols than you do for your capital account trades.
Oh, wow. Okay, so even though you're trading with profits, you're still, I don't know, it's almost like you're diversifying within the system itself.
Precisely. And one thing we haven't even talked about yet is how to know when to actually exit a trade, right? Because that's how you're solidifying those profits, or on the flip side, limiting your potential losses.
Right. Knowing when to walk away is just as important as knowing when to get in. So what's Optionister's take on exit strategies?
Well, they have specific recommendations for each of the account types, and it gets pretty interesting, actually.
All right. I am ready to hear it. Lay it on us. What are the exit strategies? Okay, exit strategies.
Sure.
It's that moment of truth. Right. When you either lock in those profits or you cut your losses.
Yeah.
Optionister, I'm guessing, they don't have just a general rule. They have specific advice for each account.
Yeah, it's all about context. So for trades placed from your capital account, they keep it pretty simple. They say, aim for about a 30% profit on your position and then get out.
Really? Okay, so not trying to ride it to the moon, just like consistent wins feeding that profit account.
Exactly. Think about it, like a 30% gain, that might not sound as sexy as like doubling your money, but it's actually a really solid win in the trading world if you can do that consistently, right?
Right.
That's how you build up that reserve to play with later.
That makes a lot of sense, yeah. consistent gains over risky bets. Okay, what about with the profit account? Because we are kind of playing with house money there.
Sure.
Are the exit rules different?
Yes, absolutely. And you'll see that same kind of thread throughout all of their recommendations, right? So remember how we talked about choosing different focus symbols for those trades?
Right.
That same kind of thinking applies to your exits as well. So this time, instead of a set profit target, they actually say you should hold on to those trades until the current trend is broken.
Okay, so it's like for the capital account, we're being a little bit safer. We want those steady wins. But for the profit account, we've already kind of, hit a level of success. So it's more about riding that wave as long as it lasts.
Yeah, exactly. You've earned the right to let those profits potentially run a little bit more.
But riding the wave can turn into crashing on the shore pretty quickly. How do you know when a trend is actually breaking down?
That's where your technical analysis skills really come in. You're going to want to be looking at things like support and resistance levels, moving averages, any other kind of indicators that you typically use in your own trading strategy.
Right.
Because remember, it might be house money, but you're still playing the market.
Right. Doesn't care.
Exactly. And the market does not play favorites.
No emotional trading, even when you're on a roll.
Yeah.
I think this whole profit cycle system really just highlights how important it is to have like a system, a plan. And it's not even just for entries and exits, but just managing your capital, your mindset, the whole thing.
100%. It's about removing that emotional roller coaster and replacing it with something that's, a little bit more structured. And frankly, I think that's something that most traders could probably benefit from.
Yeah. So as we kind of wrap up this deep dive, we've covered a lot.
Yeah.
What would you say is the biggest takeaway you hope our listeners are walking away with?
For me, I think the most important thing to remember is that the profit cycle, it's not just about making money. It's about managing it in a way that makes sense.
Right.
It's about, understanding that this is a marathon, not a sprint.
Right.
And having some kind of system, to help you navigate those ups and downs that are inevitably going to come with trading of any kind, that's key.
It really is, yeah.
Yeah.
Taking the emotion out of it, replacing that with discipline and strategy and a long-term perspective.
Exactly. And while this profit cycle, as it's outlined by Optionister, it offers a very, I think, compelling framework. It's really up to each individual trader to, kind of take those concepts and maybe adapt them and tailor them to their own risk tolerance.
Absolutely. Do your own research, everybody. Don't just take their word for it. Don't take our word for it. Paper trade, and see how it might fit into your own trading journey, because who knows, it might just unlock a whole new level of, consistency in your trading.
I love it.
All right. Well, on that note, I think that's a wrap for this deep dive.
Awesome.
Thank you, as always, for breaking it down.
My pleasure.
And to all of our listeners out